Hello, chat. Hello. Hope everybody's doing absolutely phenomenal. A lot going on today. Damn, I'm freaking behind, and we have so much to go through, so much to talk about. As you saw there, safety stocks are getting obliterated. Let me get everything up and rolling here, and then we'll start getting into stuff.
It comes in at, that's looking in the rearview mirror. That's not telling you the story of what we're about to have in front of us.
All right, so Amy, look at your top holdings. I feel like you're pretty much aligned to where Joe's thinking is in terms of where the outperformance is going to be. Alphabet. These are your top, let's call them six holdings or so. Alphabet, Visa, Apple, Tetra Tech, NVIDIA, and Microsoft. Why such a heavy concentration towards the mega caps?
We think that they continuously and historically speaking have delivered both on innovation, EPS growth. We're still sticking with that balance sheet characteristic in a tough environment like the one we're in right now. Cash flow is king, and these are the guys that really have the free cash flow generation.
Yeah, so how do you look though, and that's why people continue to invest in them and why in many respects they've obviously had the leadership role they've had all year, but what about valuation? How do you square what their valuations are when, if we want to cite, historical
Thank you for following. Thank you for being subscribed.
10-year, let's say, historical averages. How do we justify that?
Yeah, you're absolutely right. Valuation is a little bit higher than the market, but in this kind of environment, we would be comfortable paying a little bit higher for that balance sheet, as I've mentioned, and also for consistency. I think that's key in this kind of environment.
The other side of that is the valuation in the areas of the market that have underperformed, like financials, like some industrials, like materials. The valuation looks incredibly cheap. So it's important to remember that valuation, yes, it is critical in your fundamental analysis, but it's not actually sometimes a catalyst on the investment.
Oh my God.
Because the valuation can remain cheap for an extended period of time, and the valuation can remain...
The smalls, every time it's like one day coming back with the smalls just fall again, man. What a disappointment this last couple, 2-3 years have been for small caps.
Joe, like from those more depressed performance standpoints, more depressed valuation relative to tech that you like?
You have to go bottoms up. So just in the example of the industrial sector, there are companies like W.W. Grainger, Copart. These companies are managing the business well, managing the balance sheet well, but you have to be active and you need to go bottoms up in those instances because there is this universal challenge, X the Magnificent Seven, given the cost of capital.
How would you address that too? So in areas that have underperformed that, on paper look cheap, certainly they look cheap relative to, technology and comm services.
We have obviously a lot of drama in the market. We also simultaneously have, let's call it, earnings after the bell. We do have some interesting earnings here today as well. So, woo! It's a busy day. It's a very, very busy day. So, yeah, safety stocks first caught my eye here today because they're just getting absolutely slaughtered again today. And keep in mind, with these safety stocks, when you see a stock like Kraft Heinz going down 5%, that's like a stock like Tesla or Palantir going down 10%, 12%, 14%. Like these stocks don't usually just make these sorts of moves. Monster being down 4.5% today is like, Amazon being down 9.5%. Like this is just very, very large moves for these, quote unquote safety stocks. I mean, Monster's are falling off a cliff right now. $58 just back basically going into September. And now it's pushing $47, just like that, right? Campbell's Soup continues to get absolutely slaughtered. Jam Smuckers, are we talking jam or are we talking jelly? Continues to get hammered day after day after day. Pepsi announced those phenomenal earnings to kick off earnings season. Absolutely great earnings out of Pepsi. We went through those numbers. They were freaking amazing, right? And that stock can't catch a break. And it's just down, down, down to Chinatown. We have Kellanova. They thought they could change their name and it would help the stock, but yeah. No, they also split off their snack business. Coca-Cola's getting hit. General Mills, the General. Look at that drop. Oh my gosh. Just since May. May was $90. It's, flirting with going under 60. That's like Tesla being cut 55% or something like that. Like, that's insane. Look at this Dollar General. The General. Oh my gosh, the Generals can't do anything. Dollar General, General Mills, Freaking Dollar General down almost 59%. And remember, these are supposed to be the safest companies. This is supposed to be safety stocks, folks. Clorox, oh my gosh, the bleach company. Look at this drop, folks. From 166 back at the beginning of August to 120 today. Oh my gosh. You'll be flipping my flapjacks. I mean, just absolutely incredible drops. Hello. Thank you for saying hello in the chat. Appreciate you guys. Hope you're doing well. I need to figure out if I'm going to buy some stocks here in a bit, man, or what's going to happen. Might. We shall see. Let's see. Fourth quarter, 2023 possible buys. What's going on here? Oh, cake getting slammed today. Look at that dividend beast just getting nailed. RH getting slaughtered today. Oh, my word. RH. Mattel getting hit hard, right? Another one of those stocks at low valuation, just, getting nailed. Whirlpool. Oh, Whirlpool. Look at you go down. Oh, my gosh. Whirlpool? What are we at now for Whirlpool? Is this a... Oh. Wow. Whirlpool's the lowest it's been since the 2020 crash. How about that? Woo, we're getting interesting now. PayPal. PayPal goes down every day. That's nothing new. Got the Bros. I want the Bros to get hit a lot harder than that. Wins down. S-Day under 140. I like it. I like it a lot. Yes, S-Day. Thank you. And then Amazon's actually green. How about that? That's crazy. Look at WBA all of a sudden beasting. WBA hit that low at $20 and started bouncing back. WBA just announced a new CEO. Maybe we'll get into that in today's video at some point. But man, let's take a peek at... So 5 stocks I'm hedged against. Toll Brothers getting slaughtered today, so that's good for me. Polaris getting hit hard. That's good for me. Chipotle getting hit. That's good for me. Apple freaking holding up. Damn you, Apple. Come on, baby. 155. That's all I'm asking. 155, and we can call it a day. SDAO's obviously having a good day for me, so that's good. Let's see stocks I own and how those babies are doing here today. So we got, I want the other way. All right, so Fubo getting nailed today. Cheesecake Factory getting nailed today. Planet getting nailed. Honest getting nailed. Mattel getting nailed. Elf getting nailed. Texas Roadhouse getting hit pretty hard, but thank you, Texas Roadhouse. That's another one I want down right now so I can buy. PayPal getting hit. Nordstrom, Avant, Shopify, Tesla getting hit a little bit. Now, Tesla's not too bad. 1.5% in this sort of collateral damage. When I see safety stocks going down 4 or 5% and Tesla's only down 1.5%, that's a W for Tesla there. And then as far as good stuff for me, not much good today, right? Other than buying opportunities. WBA is good. SDAO's good. Target's good. Amazon's good. Qualcomm's good. JP Morgan's around break even. Palantir, look at freaking Palantir. Palantir's a beast, man. Palantir, look at all this damage out there. I mean, woo! It's a slaughter show, and look at freaking Palantir. Look at that, baby. Palantir, you have turned into the real MVP. You have turned into the real MVP. My gosh. Incredible, right? I mean, that's just incredible Palantir's strength overall. For it to be in a slaughterhouse here today. And that baby's, who knows? We'll see where it trades out by the end of the trading day, but it's potential it could go green. That's incredible. All right. So anyways, commodities. What do we got going on here? I don't like that. On a down day like today, I'd love to see WTI down. I do not want to see that baby up. No. Need to see WTI down. GSG up. By the way, shout out to everybody in the chat. Thanks for being here, folks. Thank you for being subscribed to the Twitch here. Thank you for following on the Twitch here. I appreciate y'all being here. Week 2 in this. We got earnings after the bell, and we should have some interesting earnings after the bell here today. By the way, okay, so let's start going through some news here. Albertsons unlikely to announce its certified compliance with FTC for Kroger deal next week. Oh, because Albertsons, is Albertsons supposed to get bought up by Kroger as well? Albertsons isn't expected to announce certified substantial compliance with Federal Trade Commission's second request. Wow. So Kroger Kroger's supposed to buy out Albertsons? Oh my, that can't happen. They can't let that deal go through. No. No way. No way. They can't let that deal go through. They cannot let that deal go through. Albertsons shares ticked down 1% in the wake of comments by FTC. Lena Khan, as she attended an event in Las Vegas about the Albertsons Kroger deal. Khan talked about her skepticism toward the grocery deal, including Albertsons' acquisition of Safeway in 2015, where stores were divested eventually, went bankrupt. Nevada, along with at least 16 other states, are investigating the combination. Yeah, you can't freaking do that deal. For instance, there's only 3 grocery stores. There's 3 grocery stores close to me, okay? There's 3 grocery stores. Smith's, which is owned by Kroger, Albertsons, and Vons, okay? Albertsons and Vons are both owned by the same company, Albertsons, and Smith's is owned by Kroger. So if all of a sudden Kroger buys them out, then all the grocery stores that are close to me are all owned by the same company, which obviously gives you a monopoly-like presence in that market, right? So I don't think they can let that deal go through. I'll just be honest. Same thing in Arizona. 3 dominant grocery stores in Arizona. Safeway, which is owned by Albertsons, and instead of calling it Smith's in Arizona, they call it Fry's, which is once again owned by Kroger. So then they would have like a monopoly type almost market share in those markets for grocery stores, right? I mean, you could say, well, they got competition from Walmart, sure. But at the end of the day, like if you want to go to an actual like grocery store, they would basically have a monopoly on the market. So yeah, usually I'm pro, capitalism and these sorts of deals, but not in this case, man. You can't have a freaking monopoly on the whole grocery store industry. That would be not beneficial. You need some sort of competition there, right? So. Oh, there he is, Ed Yardini.
You're sticking to your bullish case. You don't think that the CPI nor PPI, for that matter, yesterday upsets it in any way. It just underscores the fact that inflation's coming down, but it's coming down slowly, and the bond market is still reflecting an environment in which higher for longer seems to be the play.
Well, you're right about all these concerns. I looked at the PPI, and I particularly focused on personal consumption expenditures PPI. There's actually data like that for goods and services. And again, it does not include rent. And it was up 2.7% on a year-over-year basis. Back to the point about shelter, as you said, shelter reflects what happened yesterday. It's not reflecting what's happening today. There's, for example, a Zillow index, which shows that inflation is actually running in the rent category at 3.2%. And this is through September, whereas in the CPI, it's running at 7.4%. So the Zillow index tends to be a leading indicator for the shelter. And I think we're going to see over the next several months that the rent component of the CPI comes down pretty dramatically and helps to bring the inflation rate closer to where it is without shelter, which is under 3% and pretty close to 2%.
Okay, that's one part of the picture, no doubt.
Sure.
Earnings season, right, gets underway tomorrow morning. What are your expectations here?
Well, I think that we did see a bottom in earnings during the second quarter. I think
we got earnings
we're
today
seeing a recovery in the third quarter. We had a very modest earnings recession, and it wasn't because of the economy going down. It wasn't because of revenues going down. Revenues kept going up. What really came down is the profit margin because companies got squeezed, but somehow or other, companies are starting to figure out ways to make their profit margin go up. The analyst consensus expectations are showing that. So I think we're going to get a very good earnings season, and I think that'll help set us up for a year-end rally, maybe a November, December a Santa Claus rally, year-end rally.
Is tech going to be the thing that carries the market if there is, in fact, a rally?
Well, I think it's going to be a couple of things. I think we need to see the bond yield stabilize. And I think it's in the process of stabilizing right now. I think there was a lot of concern about oil prices, and even with what's going on in the Middle East.
Yeah, interesting. Okay, so we need to look at a bunch of earnings here. We actually had a bunch of earnings this morning. I haven't been able to look over these guys yet. First one I want to look at, WBA. They reported this morning. Stock up 6%, which on a day like today, 6% is we will take it. let's see here. I want to see more of like a full report. This one might be good. Walgreens Boots Alliance. Q4 non-GAAP EPS 67 cents, missed by 2 cents. Revenue beat by about $580 million, so mixed bag on the top and bottom line. Fiscal year 2024 outlook. Adjusted EPS of 320 to 350 with underlying earnings growth more than offset by lower sales leaseback. Lower sale and leaseback numbers, okay. Contribution, a higher tax rate and a lower COVID-19 contribution. Yeah, from my understanding, not nearly as many people are getting the Rona shots. U.S. healthcare adjusted EBITDA to be break even at the midpoint guidance, about $50 million. Okay. So I need to see a more in-depth report than that. Not providing guidance beyond fiscal 2024, continuing to evaluate macroeconomic trends and challenges, and expecting to provide longer-term guidance, if any, in the future. So the current, which is interim CEO, is not going to be the future CEO. Basically, she said, our performance this year has not reflected WBA's strong assets, brand legacy, or our commitment to customers and patients. In just 6 weeks, we have taken a number of steps to align our cost structure with the business performance, including planned cost reduction. That's basically a shot at the CEO. I'm not going to lie to you guys, okay? That's basically shots at Roz Brewer. And said, Roz, you freaking were supposed to be this and that, but you weren't all that. That's basically what those first few lines were there. Like you were the first round pick, but you were a bust. That's basically what they're saying about Roz Brewer, without saying it, obviously. You got to keep it professional in business community, right? But our performance this year has not reflected WBA's strong assets. Basically saying, Roz, you don't know what you were doing, and our performance is bad, and it's because of you, is basically what they're saying. Brand legacy or commitment to our customers and patients. In just 6 weeks, that's another shot at Roz, basically right there. In just 6 weeks, basically saying, we've done all this in 6 weeks. Roz, you had 2 years, if not more than that, to do some stuff, and you didn't do crap, right? We have taken a number of steps to collect a big fat paycheck. That's for dang sure. We have taken a number of steps to align our cost structure with our business performance, including planned cost reductions and at least $1 billion and lower capital expenditures by approximately $600 million. Okay. We anticipate seeing the impact of these actions in fiscal 2024, beginning in the second quarter. We are also intently focused on accelerating our profitability in the U.S. healthcare segment as we welcome our new CEO, Tim Wentworth, who brings deep healthcare experience and skills needed to propel WBA forward. Along with the support of our board, I am confident in our company's future and the ability to deliver greater value to our customers, shareholders, partners, and employees. Okay, interesting. WBA fourth quarter sales increased 9.2% from a year ago. That's a hell of a number. That's a hell of a number. That's a lot better than I expected. I'll just be honest with you guys. 9.2% from a year ago? That's almost shocking. You'd think WBA is dead, business model dead, and to put up 9.2% growth, it doesn't say dead at all, just factually. An increase of 8.3% on a constant currency basis, reflecting sales growth in U.S. retail pharmacy and international segments and sales contribution from the U.S. healthcare segment. Fourth quarter operating loss was $450 million compared to an operating loss of $822 million in the year-ago quarter. Operating loss in the current quarter reflects certain legal, regulatory, they had a bunch of kind of like one-time costs essentially, right? That have basically pulled that number down here in the short term, but it's a bunch of one-time BS that looks like it's going away, thank goodness. So overall, I'm impressed that they put up those sorts of numbers in this quarter. Just really, really impressed. All right, next one I want to check out here is see Delta's earnings. And so overall, I'll look obviously more in depth at those numbers and listen to the conference call tonight. But and the conference call is not going to be as important for Walgreens just because we're in a period between, a CEO transition, so we're not going to get the new CEO on that conference call. So, next quarter will be more important for the conference call for WBA, because then we'll have the new CEO and he'll be able to talk more about the vision and the plans for the company and all that yummy stuff there, okay? So, Delta CEO, tremendous demand in international flights fueled a strong third quarter report. Delta third quarter earnings report showed a 60% rise in profit, okay, but the company expects full year earnings between $6 and $6.25 a share, a narrow EPS guide from $6 to $7 a share. After a hard quarter, given the volatility in the environment of fuel prices, seeing greater demand for international travel. Yeah, international travel is booming. 2023 is really the year of international travel booming, whereas 2022 was really the comeback of domestic travel. And so it's been a kind of a process, because international, especially for a lot of international trips, whether it's business trips or people going to see places, a lot of people didn't want to make that decision last year. A lot of them were kind of like, let's wait, make sure everything's good. And so they planned those trips for this year in 2023. And so international demand has certainly been on fire, absolutely on fire. After a hard quarter, given volatility in the environment, fuel prices, blah, 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 international demand strong. But given the fuel prices moving up, Delta narrowed their guide for EPS earnings toward the lower end of the range previously forecast. We're at the top end of the guidance we gave at the start of the year. This game is a long game in the airline business, and you have to play the game for the long term. Revenues increased 13% from the previous quarter. Expects revenues to be up 10% in the fourth quarter. The airline reported net income of $1.1 billion in the third quarter and net income of $1.72 a share, EPS. Wow. The earnings adjusted for non-recurring cost and extinguishment of debt were $2.03. Okay. Wow. Yeah, so overall, very, I'd say, impressive numbers. Obviously, Delta's being pulled down today, but I think that's just kind of the weakness in many of these stocks. From what I see there, it's not a bad earnings. Domino's, I can't remember the ticker symbol of Domino's. DPZ, that's what it is, DPZ. So Domino's, stock's not doing much, obviously. It declared a nice dividend. Ooh, same-store sales decline in Q3. What's going on here? Domino's Pizza fell in early trading on Thursday after the report of a slight miss in Q3 revenue tally. Global retail sales grew 4.9% in Q3 after stripping out positive impact of foreign currency. Global retail sales were up 5.1% in the quarter year ago, adjusting for closure in the Russia market. U.S. same-store sales declined 0.6% during Q3, and international sales grew 3.3%, excluding foreign impact. You guys ever had Domino's wings? When I just think about Domino's, I think about how fucking horrible their wings are. Like, I got some Domino's wings one day. I was like really desperate for wings, and we were getting Domino's pizza anyways, and so I was like, let me get these wings. Oh gosh, those are probably the worst wings I ever had in my life. And I've had some bad wings in my life, but I was like, what is this? Who eats this, and who would think this is even good? Like, I was just like, what in the world? Holy smokes, it's insane. But anyways, another subject. Net income increased 46.9% in the quarter compared to a year ago, primarily due to a $28.2 million pre-tax unrealized gain associated with the remeasurement of the company's investment in DPC Dash. Okay, this unrealized gain was recorded in other income in the company's condensed consolidated numbers. Higher income from operations also contributed to the increase in net income. EPS came in at $4.1 billion versus $3.29 consensus. In terms of store growth, Domino's disclosed a global net store decline of 8 stores, interesting, comprised of 27 net U.S. openings and 35 international store closures. TPC had 218 gross openings and 226 gross store closures during the Q3. The pizza chain operator said that the global and international net store decline reflects the closure of approximately 143, okay, that makes sense, in Russia. Okay, I get it. Excluding the impact of the closures in the Russian market, TPC had a Q3 global net store growth of 135 stores. Okay. Yeah, that makes sense. Dang, they got a lot of news today. Holy smokes. So they just announced their cash dividend yesterday, and then they got their earnings that we're about to look at. September 2023 sales information. We'll look at the full earnings, and then we'll look at the, we'll go from there. Alrighty. So, I don't like this, man. I don't like this. A lot of these companies are putting their 9-month numbers first instead of their 3-month numbers. I saw it with Louis Vuitton a couple days ago when I looked at the Louis Vuitton numbers. It says, oh, this for the first 9 months. It's like, why else are we talking about 9 months? You always talk about the most recent 3 months. Like, why are we talking 9 months? And look at this. They lay this out where the 9 months are first, then the 3-month period. Okay. So, since they laid those out next to us, actually we can get better intel, right? Looks like revenue is really starting to weaken for Fastenal, from 5.7% in the first 9-month period to 2.4%. So keep in mind, this is such a much lower number than 9-month lower that based upon mathematics, that means that essentially we're far weaker if you were to compare it to the first half of the year. That likely means the first 6 months of the year, the first half, probably had revenue growth of, I guess, 6 or 7%, maybe even 8%, somewhere between 6 and 8%, let's call it. And this weighted down so much with only the 2.4% gain, right? Math. So that means there's clearly a weakness in Fastenal's business overall. Gross profit grew 4% in the quarter versus 6.3% for the first 9 months. Interesting, right? Oh, that's daily sales. Gross profit grew 2.6% in the most recent quarter versus 4.4% for the first 9 months of the year. Net earnings, 5.6% growth in the first 9 months versus 3.8% here. They must have had some tax benefit or something here, folks. Before income taxes. Yeah, because they must have had some sort of tax benefit or something. Because look at earnings before income taxes, 2.7%, but yet they get net earnings of 3.8%, right? So, and then diluted EPS of 4.1%. Maybe they bought back some shares or something like that. But, okay, interesting. So, fasteners were the weakest part of the business. Interesting. First, fasteners are more heavily oriented toward production of final goods than maintenance, which are greater susceptible to weakness in manufacturing end markets. Okay, so that's good intel for us. That means basically there's weakness in final goods end market products, right? Manufacturing end markets. So, yeah, that's going to be more dependent upon how the economy's doing, right? Safety supplies should continue to be good, obviously, with all the construction going on and obviously all the federal spending and whatnot on infrastructure. And other was a strength of theirs as well, right? Taking this further, non-residential construction down 7.2%, reseller down 6.9%. Heavy manufacturing is good, and other manufacturing is pretty good. Interesting. Okay, so what we know about Fastenal is their business looks fine right now, but it is weakening. And so, that's one of those things you look at and you're wondering, okay, is this a little recessionary or not? And I really want to see where their balance sheet's sitting at. Alrighty, WBA. So fiscal 2023 sales, by the way, increased 4.8%. So they actually had a re-acceleration in growth. So that's pretty dang impressive. Hey, question for everybody in the chat. Are you buying any stocks today? Or are you buying any stocks this week? And if you are, and you want to buy some stocks today, or you want to buy some stocks this week, what stocks are you buying? I'd love to hear from you guys in the chat. What stocks are you buying? Let me know. I want to go through those. I want to see what you guys are up to. I want to see, what you're planning on buying, the moves you're planning on making here. Definitely let me know. All right, so Walgreens balance sheet. Oh, I'm going to go through those stocks. You guys let me know about there. Yeah, what stocks you buying? What stocks you want to buy out there? What stocks look like great deals to you guys? Let me know in the comments. Let me know what you guys think are some good deals out there. I'd love to hear from you guys. So, $728 million in cash equivalents, only $11 million in marketable securities, so that's like nothing. Total current assets, LBBA, $15.5 billion in total current assets versus total current liabilities at 24. So see, they got a very bad, we can guess you can call it, current ratio, okay? So short-term debt, $917 million. If they need to push that out, obviously, it's not going to be as at favorable interest rates. Now, total assets come in at $96 billion versus total liabilities, which come in at $43 billion, right? So Walgreens has a little bit more of a confusing balance sheet than I think an average company out there, because usually a company just either has, usually if a company has more current liabilities and current assets, like usually just the balance sheet's trash in general. But for Walgreens, actually the balance sheet's respectable, but they just have a really weak kind of current ratio going on there. But if you look at total assets versus total liabilities, if you look at total equity, it's actually rather, let's call it a little more on the impressive side, okay? So operating lease obligations, long-term debt on the company sitting at about $8.1 billion right now, and we'll see what they do with that short-term piece, if they refinance that or what they do, and if that goes back to long-term debt there. We shall see. But so overall, Walgreens certainly a work in progress, right? There's a big difference between like a Walgreens and like a PayPal, where Walgreens is, I don't want to say Walgreens is broken, because you look at their net sales, it's very impressive, right? But there's more work to be done at Walgreens versus something like a PayPal, right? Bottom line, there's more work to be done. No doubt about that. By the way, before I start going through and seeing what stocks you guys want to buy out there and what stocks you guys are buying, I'm curious to see. So somebody said Fubo. Somebody said Palantir tomorrow they're buying. Somebody said PayPal and Texas Roadhouse. All right. Somebody said 3M and Target. Somebody said they bought some PayPal today and considering to start a position in Tesla. Okay. Somebody said, I did some dollar cost averaging into 52-week lows, Square, PayPal. Oh, interesting. Taking the approach of buying Square and PayPal rather than just picking one. Interesting. Hey, what was that about Caesars plummet? Hold on.
Being shut down by the UAW, 8,700 members walking off the job. Let me put this into some perspective.
Wow.
This is the most profitable auto plant in North America. It is almost 20% of Ford's U.S. production. The Super Duty is built there. Hugely profitable and popular pickup trucks, especially for contractors and for professionals who use it for more than just moving.
Wow.
Percent.
Not
GM
good.
in 3 months.
Not good.
Ford's down 21%.
Orchestrate whatever transition they're going to make to EVs, and so if you have higher labor costs, it's that much trickier.
You can talk about low single digits
yeah.
here. We're right, 4
Absolutely.
and 5 times earnings
right.
for these stocks.
No, that's right. And and if you look at the overall capital structure, they have all kinds of debt on top of that, and a lot of longer-term liabilities. So I'm not to say doom and gloom. It's just much more about what does it mean for overall sort of labor costs and people.
About casinos. What do we know here?
Yeah, well, you were expecting thousands of workers in Las Vegas to go out and picket today. There's not been a strike yet. And I asked CEO of MGM, Bill Hornbuckle, at the Global Gaming Expo, which I'm just back from in Las Vegas, about this. And he said, we're going to get a deal done. We haven't had a strike here in 40 years. It's got to happen. And they're expecting that to happen, hopefully, before F1. I think what you're seeing today, and if you look at the broader group, I mean, Caesars is down 6%, Penn is off 6%, Bally's off 8%. The concern here is not so much the strike that affects 3 big companies in Las Vegas, but the CPI number coming in hotter than normal. Remember, when you have people paying more for gas prices, conventional wisdom is that's less money they have for discretionary spending, like going to your regional casino and spending money. And who does that hit? That really hits Caesar, Bally's, Penn. I mean, these are the big players in that regional market. I will point out that Caesars told analyst Carlos Santarelli of Deutsche Bank that they expect the growth in regionals to largely mirror what they see in Las Vegas.
Yeah, my opinion is they'll likely get a deal done as well. Vegas, living out here for so many years, we just operate differently and a lot smarter, just to be honest, than these other folks like the UAW versus Ford and all that. Like, we really look out for the best interest of everybody at the party, right? And we're not going to try to make a fool of ourselves, like, what's going on in Detroit and all that stuff. Like, there's a reason Detroit's, headed the way it's headed over the last 30, 40 years. And there's a reason Vegas has been, let's just call it becoming a bigger and bigger beast over the last 30, 40 years.
It's too soon to be confident inflation is heading back towards the Fed's 2% target. She makes specific remarks about today's CPI report, saying it is a reminder that restoring price stability will take time and could be uneven. The current phase of policy, she says, requires patience. That repeats her comments from yesterday. And again, repeating, says we may be at or very near the peak of rates for this cycle. So still not definitively saying that the Fed is on hold, because she goes on to say she would not take further tightening off of the table. May need to stay higher for longer. That's been out there. But she adds that the Fed's previous forecast, that is the one in September, suggested, I guess, raising questions about the two rate hikes the Fed has, the two rate cuts the Fed has kind of built into its average forecast for next year. She says recent economic reports have been strong, including both labor and economic activity broadly, and some further rebalancing of the economy will be needed. Back getting to inflation again, she says the positive news today came from the decline in core goods. Housing inflation is moderating, but progress is uneven. And she's monitoring if the recent house price growth puts new pressure on rents. Core service inflation, she says, remains elevated. That's the thing that Fed Chair Jay Powell's looking at, and progress has been limited. Bringing it down, she says, will require slowing labor market. On those rising yields, it does imply the tightening of financial conditions, which she said yesterday as well. And higher yields, if sustained, she says, could reduce the need for further rate hikes. So, John, hard to sort of give a definitive, is this hawkish, is this dovish? It's a little bit more hawkish than yesterday, but broadly, she's still calling for patience and not necessarily signaling very clearly a rate hike in November.
It seems like tucking the corners of the sheets here. I mean, now that the market sort of expects to hold steady at this next meeting, now that the market has digested that, maybe don't get too excited like it's going to stay here forever.
I think that's right, John. I think that's a clever way to look at it.
Yeah, I mean, at the end of the day, they're playing games, right? The game they're playing is really they want to keep rates here for probably the next 6 to 12 months. They need to keep leading on, like, oh, we could potentially raise, all options are on the table, all those sorts of things. They don't want the market to get too excited. They certainly don't want the market to even think about cutting rates yet, right? So, anyways, that's just what's going on. Alrighty, so let's see here, housing stocks. So, by the way, I want to see actually what you guys were talking about for buying stocks. If you weren't here earlier, by the way, I was asking everybody what they're planning on buying for stocks in the chat. So I was curious on what everybody was looking at, right? So this is kind of where I left off. Somebody said they're dollar cost averaging to Square and PayPal. That's an interesting strategy because you're not just I guess you say determined upon one of those succeeding. You're kind of playing both, right? WBA, 3M, Target, Texas Roadhouse, and Rivian. Interesting. Okay, so kind of going with a little bit of divs plus obviously some growth in there. Somebody said buying today and on Monday, bought PayPal, WBA, O, and Cake. Fubo's not even a $1 billion market cap. Somebody said they're buying Bros, PayPal, and Texas Roadhouse. Okay. Bros, by the way, is a coffee shop. If people don't know that one, it's Dutch Bros. It's a very popular coffee shop. Mostly on the West Coast. I don't want to say it's not in other parts, but Dutch Bros has always seemed more of like a West Coast United States type company. But anyways, somebody said they got a bit of HRL in Kraft Heinz. Interesting. Okay. HRL. What is HRL? Let's see. It is Hormel. Okay. Yeah. Interesting. All right. Let's see. Went to WBA stores yesterday here. So many sales stickers. Nearly every product had a deal. Empty stores. Well, based upon their revenue numbers, doesn't look too empty. I think Jeep and GM are headed for bankruptcy. I think Ford is trying to bankrupt dealers and pivot to Tesla model. Interesting thought. Slightly, maybe a little conspiracy theory, but interesting. Yeah, I don't know. I don't know. Let's see. Thoughts on Target? I mean, my thoughts on Target have probably, been what my thoughts on Target are. It's been a stock I've been buying here recently, and I don't really plan to stop. Somebody said, I think that's where they hold brokerage funds. Yeah, if that's where they hold brokerage funds, then it's probably yielding like 4% versus a lot of these treasurers are yielding 5+, right? And some people are just like, I want to go to where the best is, where the best opportunity is. So somebody said they're waiting on Crocs. Interesting. Somebody said buying PayPal, Target, and SCHD, which, if I recall, is a dividend play. It's a difficult position that holds T-bills, or default position that holds T-bills. It has a 7-day yield of 4.8%. Yeah, and I mean, there's not a huge difference there, but for some people, they look at that and they say, well, I can get 5.1%, 5.2%. Even better than that. Excuse me. You can get 5.5% on a 6-month right now, right? So some people might say, why would I want 4.8? Well, I can get 5.5 guaranteed from the government. So, you got all that. Idiom, okay. Somebody said they bought some NEE in PayPal. Croc is a great buy at this price, this person says. Buying Target and ACVA. ACVA. And auctions? What? What is this all about? ACV Auctions provides a vibrant digital marketplace for wholesale vehicle transactions and data services, which offer transparent and accurate vehicle information. Yeah, I'm sure like people from the auto industry or that pay attention to this, they're probably very well aware of this company. The rest of us are in the dark. The company platform leverages data insights and technology to power its digital marketplace and data services, enabling its dealers and commercial partners to buy, sell, and value vehicles. Its platform. Interesting. Okay. A little different. Yeah, Crocs is one I've looked at, and I've had a lot of questions about that one over time. But for me, in regards to Crocs, it's just like, I don't know, man. I'm just trying to figure out, is it a fad, or is it really here to stay long term? And that I just don't have a strong opinion on. I can't figure out if it's really like a fad or if this is really something here to stay, folks. I can't, I just can't figure that part out. So, yeah, man, I don't know. That's the tough part, I'll be honest. See if they got anything interesting going on here.
Hey, John, we're out here on 17th Street, just outside the White House. We are keeping our eyes out for any CEOs who are arriving for this meeting. This is a meeting for the Biden administration to talk about their infrastructure spending efforts and talk to the CEOs who are at the front lines of that effort to make sure that everything is going well. Obviously, also an opportunity for the Biden administration to hit, ahead of a campaign year, what they see as the success of what they're calling Bidenomics here at the White House. Take a look here at the CEOs who are going to be in this meeting, because they represent a whole different range of industries, starting with Brendan Bechtel of the Bechtel Group. You've got Calvin Butler of Exelon, Kenneth Chenault now of General Catalyst, Brian Cornell of Target, Tasunda Brown Duckett of TIAA, Arvind Krishna of IBM.
I'll tell you why they're doing that. Certainly if you're Biden, right, and you want any chance of getting reelected, you need this economy to be as strong as possible the next 12 months. Bottom line. You need inflation to certainly be cut down, but you need to go into that election with very low unemployment, inflation, and no longer be an issue at all, that it, becomes an afterthought. People's memories, actually get over pretty fast. So he's going to need inflation to come down. He's going to need a strong economy. And so, I can tell you his poll numbers have not looked good. So if he wants to get reelected, he needs to, have some things go his way very quickly. And I think that's why they're having this meeting with these CEOs. So to kind of conclude here, I just want to see how everything kind of finished out before we wrap this baby up here today. Mixed bag in semiconductor land. Oh, I gotta see how the public account did today. I'm gonna guess the public account. So let me see how stocks were today in general, right? Let's see. So gotta always keep an eye on Meta and Tesla specifically if it's public account. I'm gonna guess the public account was down $29,500 today. Okay, everybody, get in your guess. What do you think the public account was down here today? Okay, guess how much. Everybody, put in your guess in the chat right now. We'll see if anybody's correct. I'm guessing $29,500. That is my guess. Everybody gets a guess down there. You got to get it in the next 45 seconds. Okay, because within 45 seconds, I should have this baby up and on here. All righty. Everybody got their guesses? Here it is. $25,100 is how much the account was down here today. So, yeah, I think everybody might have been just a little off. I've got to see everybody's comments here. See if anybody actually had got it or not. Oh, we did have a few people that said 25K. Very nice. Oh, somebody said 24K. Interesting. You guys are good, man. Somebody said 22K. I had a lot around like 27.5. So, well done. Well done. That's a fun game. We should start playing that at the end of each live stream. If I forget, remind me to play this game at the end of each live stream. We'll guess, is a public count up or down, and if it's up or down, like how much it's up or down, we'll play that to cap off every live stream for now on. But anyways, guys, that wraps up today. Appreciate you being here. Earnings season coming, so certainly with earnings season, we might run the live streams a little longer than usual because there's going to be so many company earnings coming out after the bell, and it's just going to be complete chaos, wildness. Appreciate y'all. Much love as always. Thank you for being here, folks. And other than that, yeah, I hope you all have a great day and see you over on the tube.